Hello everyone, welcome back to my channel. So this video marks the end of week number 27 in this road to 100k realized return challenge. This has been a week of basically playing catch up all week after the deep losses that took place on Monday after the news coming from the Deepseek, the Chinese AI chatbot, and its potential competition to the incumbent, or usually the most used one, ChatGPT, and also to OpenAI as well. However, things recovered a little bit, but they didn't fully recover from the highs of last week. But as things stand, we still managed to get some returns in, and based on the trades that we did, even though of course it was not as much as we expected. Just to give a brief review of all the trades that we've done, and looking right here. So basically, as you see, these are the trades that we placed on Monday, which are already shown on the other video. But here, yeah, that's where all the other trades basically begin. So after the week after we sold all those puts on Pfizer, we were able to sell 3 more contracts on Pfizer as well, because we still had funds available, and we managed to sell them for the same maturity at the end of this week for 6 cents, and with a fee of 164, which is also already in here. I already filled out our scoreboard, and this is the trade right here, as you can see. And basically what transpired was that these puts became very close to being valued at 1 cent each, as basically the time to maturity became closer and closer, and it was becoming ultimately clear that the stock would not reach our strike price of $26. Basically, on Thursday, what we did was we bought all of those put contracts. We bought back at 1 cent 2 of those, and the remaining 18 contracts at 2 cents each. And why is that? Because at the time, the premium for the following week put option, the equivalent put option for the following week, was trading at a pretty good premium at 27 cents. And so I just decided, all right, let's take this opportunity, let's bought all these puts back and get back our collateral, so then we can use it to sell another 20 contracts with the same strike price, which we basically managed to sell at 26 cents, and we still had to pay almost $14, as you can see here, in fees. Now, one thing to keep in mind is that we were able to sell at without paying any fees at all. Actually, we had a credit, because as you can see here, this is 112 that we paid, but then we received 3.15 in return. And because of that, we had to reflect that credit, so to speak, in here, because this was a grand total of $2.03 in credit. And so that's where we are here. And so basically we rolled over a position for another week to see if we either can buy the stock at $26 and bring our average price to around $26.42, or if the stock ends up recovering and if it reaches our strike of 28.50, as we still have this call option sold right now. This position is still standing until next week. We will be able to sell these shares and breaking even on our cost basis, which is currently 28.50. Now, apart from this, and basically the calls that we sold on QQQ last week, they expired worthless, and so we basically closed the position. As you can see right here, we managed to close it. And then this was the position. Yeah, we closed. It basically expired worthless on Wednesday, on the 29th, and then we basically rolled over a position again. We had to use again a 2-day call option because there was not enough premium to sell calls with 0 DTE or 0 time to maturity or overnight options, and so we basically had to settle for 2-day options. And basically we got again another premium which is quite mediocre, 20 cents with a fee of 2.43, which is reflected right here, as you can see. And again, this by mistake we sold at 535, not at 536, but it ended up not mattering because even though the stock approached the QQQ price of each share, ended up touching 531 on Friday, they came crashing down later in the trading day, and so they managed to finish the day at around 519. So these options also expired without any value. We kept the premium for ourselves, and we also kept the shares. And as you can see here, it simply expired worthless with no further action from it. And now, as things stand, we still have these 20 puts on Pfizer to expire next week, and we also still have these calls that we sold on Pfizer as well. So we basically have now sort of a short strangle or a diagonal short strangle, because we have more puts than calls, but nonetheless we have to wait and see what happens next week in terms of this price, because it would be really useful if we could sell these, especially as earnings should not be that far from being disclosed at some point, the earnings for the year 2024. And yeah, we will have to wait and see what happens. Just for reference, this is our current standing at the moment in terms of realized returns, all right? And as you can see here, this is accurate as of the day of Friday, January 31, 2025, right? And as you can see here, we are currently with the realized return of $27,459.69. So we made some progress. We have already still some unrealized gains or losses, but will turn out for sure to be gains once these options are matured, but they are not reflected yet, and so we'll have to wait until these are fully settled so that they can be reflected in our realized return score. Another thing that I wanted to show you, because I was queried about it on YouTube or in the comment section, and as you can see here, just to give you an overview of the performance that we managed to have all time since our inception, we managed to get a return of 16.24%. Now this value is changing basically with every trade. Sometimes can go lower, sometimes it can go higher, because also due to the fluctuations of the market, this is also something that is constantly fluctuating. And yeah, but so far, yeah, it could be better. Basically, we ended up having less return than the index itself, or most indexes, the S&P 500 and the Nasdaq 100, as they had for most of the year of 2024 a return overall of around 23-24%. But still, considering the fact that we had some bad trades, we made some mistakes in between, which are reflected here in our performance, mostly due to earnings, and we had positions on puts in which at the time which earnings were going to be released, and so our performance suffered a lot from it. And yeah, but currently, as things stand, as you can see here, and we are using as benchmark the S&P 500, and the Dow Jones Industrial Average and the Nasdaq 100. And as you can see here, yeah, this is correct. I'm going to zoom in a little bit more so that you are able to see it. As you can see here, we were able so far to outperform the Dow Jones and also by a very, very tiny margin the S&P 500. Now, this is of course considering the entire performance of the portfolio all over time since our inception. We are still lagging the Nasdaq, but the Nasdaq performed better. So, and probably if we hadn't made those mistakes, which turned out to be badly for us, we probably could have become at least closer to the Nasdaq. But yeah, we are still learning. We are constantly learning, and mistakes will be made at some point. But yeah, we have reason to be satisfied with it. Now, this is where we stand at the moment. For next week, we will be doing basically the same thing with QQQ. Probably will not be able to sell 0 DTE call options on this because it's too far away from our strike price that we want to, which is here at 536, and this premium is far too low to pay off to be worthwhile. So probably we'll have to extend to 2 or 3 days. But this is something that we'll probably have to assess as time goes. Probably this 536 for 2 days probably will be something that we could consider, or 2 or 3 days, yeah, probably here as well. But yeah, we'll have to wait and see what happens. For the time being, this is it. Feel free to leave your comments below, and any questions you may have, you can also send me a DM on LinkedIn, and also feel free to like the video and subscribe to the channel. I posted a video on a strategy for you to profit when a company is about to release its earnings. I use Tesla as an example. You can check them out. The return was quite good the way it turned out to be, and yeah, I fully recommend that if you have some interest in trying to profit from earnings releases, which happen several times in a year. I suggest you check that out, and we reconvene at on next Monday for the start of week number 28 in this challenge, and I'll see you there.